Hey guys, welcome to KDLounge. We are joined by Kevin Murcko, CEO of Coinmetro. Hi Kevin, thanks for joining us. How are you?
I'm good, Afonso. How are you? Thanks for having me.
I'm good as well. So we're here to talk a little bit about you, about the project, and about Kadena in general. So before we go into Coinmetro and what it's all about, if you can tell us a little bit about yourself, what's your background, and what have you done so far with your life?
Sure, absolutely. Let's see. I got 45 years to unpack. So how much time we got?
Good, good.
As far as my professional career goes, I've been involved in fintech and finance, traditional finance, for the better part of 22 years. Most of that was spent in FX and foreign exchange. So I've done everything in FX from being a trader that lost money to learning how to trade, to managing accounts for others, to managing client relationships, to owning my own FX brokerage. And through that journey, I kind of discovered I kind of discovered a lot of things that I didn't know existed, and I think most retail traders don't know exist, don't know how things function, etc. A lot of eye-opening things happened during those 10, 15 years of that transition from a trader that doesn't make money to actually running a brokerage. And that led me down this path to be very retail centric. And so that's why, the whole vision behind Coinmetro, et cetera. And we'll get to that later, I assume. But
Mhm.
so yeah, for me, it's a lot of traditional finance experience. Starting out as everybody starts out, again, that's as a trader that doesn't make money, that just keeps on trying and eventually finds a way to make money trading, all the way through to seeing kind of behind the curtain, which is
Mhm.
provides, I think, a little bit of uniqueness to the way that Coinmetro was built in contrast to some other properties that exist in crypto.
Okay. And so, in this experience of trading, did you start with stock stock market? How did you find crypto? What attracted you to crypto?
So, from a personal level, so I got involved in FX back in the late '90s, and this was before foreign exchange was actually regulated. It was very similar to what crypto was in the nascent days of crypto, meaning
Hmm.
there previous to this, the only difference being that previous to that, banks could trade in the FX markets, and only banks. Thus, if you worked at a bank and sat on a desk, you could trade in FX and foreign currencies. If you didn't, you couldn't. And slowly but surely, that started to change. And in the late '90s, there were a few brokerages online that were offering trading for retail clients without licenses because the license didn't actually exist yet. They just deregulated the industry so that anyone could trade FX, but they didn't actually create any regulation around it for retail participants. That took a few years, seemingly very similar to what's happening or what
Yeah.
has happened in the crypto industry. And so I started in FX. My dad had tried to trade stocks when I was a kid and got absolutely wrecked. And so, with that in mind, I did not want to trade stocks. And to be honest, stocks to me, especially as a kid, were boring.
Yeah.
It's like, yeah, you put money somewhere, it sits there, you make 8%, 9% a year. Then you have years where you don't make any money for 4 or 5 years in a row. You have bear markets. And it just seemed boring to me, and I didn't understand enough about fundamentals to be able to really jump in and make money.
Hmm.
In contrast to FX was super volatile. It still is volatile. It's even in some cases more volatile than crypto in certain pairs, and I'm sure a lot of people around the world, like in Turkey, South Africa, Venezuela, Argentina, can attest to that. But it was exciting to me, and because I was able to jump in and jump out, and the moves were big enough where leverage wasn't really needed. A small
Yeah.
amount of leverage went a long way. Obviously, then a lot of things changed in FX, and 500 to one leverage became a thing, and et cetera, et cetera. But crypto became in 2009, shortly after the Bitcoin white paper was released. A friend of mine actually MMS'd, so multimedia messaged me on a cell phone. I think I had it was a really bad cell phone, but I can't remember what it was. But it definitely wasn't a smartphone. Well, it
I,
was not smart, that's for
I
sure.
didn't I didn't even remember MMS was a thing. Yeah, but
Yeah.
it
So I
was.
got an
You're right.
MMS of the Bitcoin white paper, and I read it. And to be honest, I didn't think about it as a currency. To be honest, I didn't think it would be here in, 13, 14 years later. What I thought is, wow, like equity markets, bond markets, all these markets around the world, super antiquated. You can't move money quick. It takes 3 days to settle. It's very hard to invest in another country's equity market unless have a lot of connections, or you have to go through multiple banks, counterparties, all this crazy stuff. I thought this is going to revolutionize equity markets. That's the first thing that popped into my head. And I started mining Bitcoin on an iMac. I had an old iMac. And when I say old, it was one of those iMacs that was, really wide and colorful, like the original, original iMacs. I had it sitting in my office. I was living in the west coast of Mexico at the time. I connected it to the internet for the first time in, I don't know, a couple of years, and downloaded the original Bitcoin literally wallet that you could mine from. So you had to download the entire blockchain. But at that time, I think it still took like 2 days because obviously
Really?
my speeds were shit and whatever.
Yeah,
But anyway,
at
it
that
still
time,
took
yeah.
2 days to download. But I ended up mining, if I remember correctly, something like 700 Bitcoin on that iMac.
I don't think I want to ask you what happened to that Bitcoin. I think
Yeah,
I'll
yeah.
be
Well,
sad, but okay.
I have to tell you, if as a trader at heart, if I would have held that Bitcoin till now, I'd be a terrible trader.
That's
I'd be a very lucky hodler, but I'd be
yeah.
an extremely terrible trader. So no, I made a good amount of money on that Bitcoin, bought and sold in and out many, many times. But yeah, I can't say I still have any of that original mined Bitcoin,
Of course.
unfortunately. But that's because I'm a trader at heart, and being a good trader means you sell and take profit. That's how trading
Correct.
works.
That's correct. That's
So
correct.
yeah, and subsequent to that, I had my FX brokerage in around 2014, I think. I started to get lots of traders that were asking for exposure to Bitcoin.
Mhm.
And while on the personal side, I was already buying and selling, and I was on the Bitcoin Talk forum. I was literally in the forum when the Laszlo pizza transaction happened. So I had been around. I had been around a while, but on the professional side, I hadn't really delved in. And that really started my exploration into why there was no liquidity, why the APIs were horrible, why was nobody using any type of real financial APIs like Fix or Fast, why was everything, basically REST APIs, etc. So that's where it started. And then, 3 years down the line, Coinmetro became a thing.
Nice, nice, nice story. And speaking of Coinmetro, maybe you can, for the few people that don't know what it is, you can give it a little a brief explanation of what it is and what led you to. I mean, I guess what led you to build it is what you just described, but really, what is the core values of Coinmetro?
Absolutely. So back then, well, we'll go back to 2014. I had these clients on my FX business looking for exposure to Bitcoin. I thought, well, this shouldn't be that difficult. Yeah, smiley face. Um, essentially, there was two different exchanges that were offering APIs. At least I would say the more robust API at the time, and that was Bitstamp and Huobi. And we ran some tests connecting to those APIs to see what pricing looked like, what the difference between each tick looked like, from one tick to the next, how much the price would move, what the volatility looked like. Because our FX brokerage, or my FX brokerage, was about not taking risk, because we were very upfront and transparent to our clients. We had a very small client list, but we actually, the majority of our clients over the entire lifespan of the business, which was roughly 10 years, were profitable. In contrast to most retail brokerages where 70 to 80% are not profitable over time, we actually had 60 to 80%. It fluctuated over. I think at the end, we were probably hovering around 70% of our clients were profitable. And so it was a very different business model. And so I was trying to find a way to offer this type of liquidity, what we would call STP, or straight through processing. I didn't want to be a market maker. I didn't want to make
Hmm.
money when people lose, et cetera.
Hmm.
And it was impossible. So the journey started there. The initial idea was, well, somebody's got to aggregate liquidity for Bitcoin, because there's going to be other players in the market, not just my FX brokerage, but there's going to be other brokerages that want this. And so that's where the process started. Then somewhere down the line, 2016 into 17, the ICO bubble really
Hmm.
emerged, right? 2014, the first ICO happened, which was Mastercoin. Nobody really remembers that one. But in 2017, to the end of 2016, into 17, into the end of 2017, as the bubble started to grow in crypto, ICOs went rampant. And I thought, well, my dad taught me one thing that I'll always remember. Maybe it might have been my grandfather who taught my dad, who then taught me. Maybe we were all in the room at the same time, but basically said, if you're going to start a business, never use your own money. And that may sound crazy to some people that never started a business, or those that have started small businesses, because I've started many small businesses where you always use your own money, right? Because you don't really know there's any alternatives.
Hmm.
But when you're going to take on all the risk, put in all the blood, the sweat, and the tears, somebody else has to take some risk, and usually that comes from people funding a project. And I thought the ICO idea, to me, is still to this day the biggest innovation that's happened in crypto. I don't think anything touches it, because the ability for small businesses to be able to fundraise either from the community, their community, or just the world at large without having to go through so many hoops and be able to create amazing ideas and etc. is absolutely amazing, because it also allows all these retail people to get involved on the ground floor. Doesn't mean they're all going to make money, but
Yeah.
they have the opportunity to make money, and that's amazing. So I decided, well, let's do an ICO. So we did an ICO. Through that process, I thought, my whole experience has been with retail traders. I know about institutions because I've traded on desks. I know how the institutional side of the business works, but it's disingenuous to me, because the vast majority of the population that trade or get involved in any type of financial opportunity only see like 1/8 of really what's happening behind the scenes. So I said, well, maybe aggregation of liquidity, we'll let somebody else do that. Let somebody else handle that side of the business. Let's create something that's transparent, that people can trust, that works on, putting the client's needs in front of the business. That's what we did in the FX business, and it did very well. We kept it very niche. There wasn't many clients. We had about maybe 700 active clients, but we kept it small on purpose because it was a very small team. I knew everybody's name. I still know their first names. In fact, some of them are clients at Coinmetro now. And so the idea was, okay, let's build an ecosystem that puts the client first, that puts transparency first, that lets people understand how the market works, so they don't take stupid bets, they don't make stupid mistakes. We try to help them do research so that they don't pick things that end up going to zero. They're not putting their money in Shiba Inu or whatever these, or Safe Moon. Let's get people away from the safe moons of the world and bring them to something that can actually drive value over time. And that was the premise. And obviously the vision and the mission hasn't changed. I guess the way we word them, the words get prettier over time. But at the end of the day, that's the mission. Clients come first. If you help clients succeed, if you help people do better in their lives, your business is going to be fantastic. Simple as that. So great customer support, really good really intense focus on making sure that the client journey is easy, it's understandable, that it's good for the beginners, the pros, the intermediates, all that great stuff. And then just building a nice suite of products that allow people not only to, not everybody's going to be a trader. And if you think that anybody can be a trader, you're wrong. I used to teach trading. I guarantee you, not everybody can be a trader, because it's not about trading is not difficult from a technical sense. You don't need to draw a bunch of lines on a chart. You don't need to be a master in fundamental research.
It's emotional, right? It's emotional.
It's emotional, 100%. Well, let's say 99% emotion. If you, as a human being, can control your emotion, make a plan and stick to it, I can give you a dartboard and a blindfold, and you can make money trading. But if you can't, and most people can't, then you're never going to make money trading. It doesn't matter if I give you a system that makes me money, you won't make money, right? Simple as that.
Yeah.
And so anyway, focusing on those things is what kind of founded Coinmetro and what has seen Coinmetro grow over time. And you can, if you go into like our Telegram or our Discord, or you come to one of my AMAs on Fridays, you'll see that we have a very, very vibrant and very connected community, because everything we do, we bounce off the community. It's like our sounding board. We don't have a group of old white fat bankers in a room somewhere where we talk about product. We talk about, what do you think we should do? What's the next big thing?
The advisors.
Yeah. We never went down that advisor route. Here's 1 billion tokens. Can I put your name on my project?
Exactly.
Yeah, we didn't do that one.
Okay. No, it's funny you mentioned not everyone can be a trader, because I'm sure I cannot be, and I think intrinsically I prefer to be like an investor and hold it. And of course, we all need to take profit at some point. But I hate the stress of, oh man, did I catch the bottom, or it's going down? I don't like it, so I prefer to just hold it. And
to be honest, Afonso, that's how you make money in this market. I mean, the best trade. Look at Ark Capital. If you saw the recent stories about Ark Capital, that they sold off, I don't know, a ton of shares of Facebook or Coinbase that they bought near the high, and now sold off at near record lows. And that's one of the best run hedge funds in the world. Exactly. And so the way you make money, even if you think you're a trader, so I trade. I don't trade as much as I used to, but I dabble here and there, and I make a little bit of money. Sometimes I win, sometimes I lose. I have pretty good money management, so I do okay. But the vast amount of money I've made in crypto is by holding. And
Mm,
that's because crypto, people think that equities are like, even I said when I was a kid, I thought they sucked, they were slow and it wasn't really interesting for me. But the foundation of the equities markets is that nobody trades them, meaning there's not nobody. I mean, lots of people start out when they're kids or when they're young adults and they say, I'm going to trade stock. And then they go, no. But the vast majority of money that goes into stocks comes through pension funds, it comes through endowments. They just buy and hold. They're hodlers. If
yeah,
everybody traded, if everybody was a day trader in equities, it would not go up. It would go down almost all the time
exactly. Yeah,
because most people can't trade. And so with crypto, it's the same thing. The best way to make money in crypto is to find things you're passionate about, find things that you believe are going to do well, research companies, research teams, find something solid, have some money in the majors, Bitcoin, Ethereum, etc. Those things are what dictate the market and will dictate the market for the better part of the near and middle future. But you find companies that you believe in, you put some money in, you dollar cost average, and you
exactly.
hold. That's it.
That's my strategy, and I think it's the best for
It
me.
works.
At least
It
it
absolutely
works.
works.
Yeah, and less risk than just crazy trading, which I find it funny and interesting. And I follow a lot of traders on Twitter and YouTube, and I find it fascinating, but it's just not for me. So I'm glad that you worry about both sides of the coin, so to speak.
Absolutely.
Uh, so one thing, an idea that's kind of, I don't know, around is that exchanges are like evil, the anti decentralization to the decentralized exchanges, so to speak. How do you combat that feeling? How do you try to make people understand that that's not the only thing exchanges are?
Sure. I'll give you an analogy from the FX markets, which I think is an important one, and then I'll answer your question. So the analogy is this: when I was a trader, I was trading at several different exchanges, and I was managing funds, and also trading direct with one or two banks. And when my biggest focus as a trader at that time was to make sure that I was getting filled directly to another participant, because in my mind, that if I was getting filled by a market maker, they were trading against me, and it was against since they were trading against me, I didn't want to trade with them, right? And
Mm,
in my mind, for years, this was a big thing, and I thought that everybody thought this way. And when I went around in circles that I was in, it was the same thing. Oh yeah, I wouldn't trade with a bucket shop or a market maker. So we used to call market makers in FX bucket shops. I'm not going to trade with a bucket shop. I want to trade in an ECN, an electronic commercial network, something that matches orders to other clients because it's fairer.
mhm,
Then, I got into the retail business and I found out nobody cares. If they get filled, they're happy. They don't care who fills them. If I fill you with a legitimate order and you get slipped, and the guy that fills against you doesn't slip you, guess who you like better? You like the guy that didn't slip you because you don't really care how things work behind the scenes. And in some ways that's good. In some ways that's really bad. And in life, lots of narratives are created by a minority, and the minority thinks the majority believes the same narrative. And I think this, to a great extent, not your keys, not your crypto, is a narrative of the minority that the majority doesn't necessarily care. And I think there's valid reasons for that. First reason, it is accurate to say that many exchanges have been hacked. Very accurate. Centralized exchanges. It happens. It happens quite often. Just like it's accurate to say many banks are robbed. It happens. Actually, it happens quite often. Now, when Wells Fargo used to deliver gold across the US in a wagon, lots of wagons were robbed. So people stopped putting their gold and their assets in banks because there was no insurance. And they put them in their houses. Well, what happened? Lots of houses were robbed. Now, the difference back between the 1800s and now is that when your house was robbed in the 1800s and you lived on a plain somewhere in Montana, you're not really telling anybody because there's nobody to tell, right? Nowadays, though, you go on Twitter, you go on social media, and spear phishing and people getting hacked and bridges getting hacked are a thing. The difference is that with a centralized organization that's regulated and that actually wants to continue to do business, the onus is on them to make things right. Meaning, if a big centralized exchange that's regulated, or a small centralized exchange that's regulated, that wants to do well by their customers, first of all, they're spending a lot of money on security. They're going to spend a lot of money on infrastructure. They're going to spend a lot of their money on making sure that they're safe. and God forbid something happens where they're hacked and they want to continue to do business, then they're going to do whatever they can to make things right with their clients, meaning paying them back. And eventually, now we do have insurance now, which we didn't have 2, 3 years ago. Fireblocks is insured. BitGo is insured. Most of the big custody agents that centralized exchanges use are insured. And as we move down the line here, we're going to see more and more insurance. Eventually, we're going to see something like the FDIC or the Omnibus in the UK, where there's insurance from a government level. It's going to happen. When we see that transition, I think a lot of people, most people, we talk about people not being traders and being traders. Well, I'll give you everybody loves to talk about your grandma and crypto. And I know that's really cliche, but I'm going to throw grandma in the conversation, right? So even your mother, never mind your grandmother, but somebody older who doesn't necessarily understand tech, where are they safer? Trying to figure out how to connect to MetaMask to their ledger to go on to OpenSea to buy an NFT, to buy an NFT, for example, or do the same thing to go on a decentralized platform and buy any crypto asset, or by going through an easy UI controlled by a centralized exchange where they can use their dollars, their euros, whatever, get easily into the market, few button clicks. It's understandable for them, and they don't need to take the burden of security on their own shoulders. Because at the end of the day, they're not going to be as good as or professional in security as that regulated, well-to-do centralized exchange. So what I think is great, though, is that there's options, right? Because in traditional finance, you don't have an option. You can't go to the bank and go, you know what, I'm going to withdraw my money because there's this really cool decentralized bank down the road that I'm going to pop my money into. That doesn't exist. So the fact that that exists, I think, is great. And I think at the end of the day, what's going to happen is because of regulatory issues, also because of just most people won't learn enough to be able to put that on their own shoulders, right? They just won't. Most people won't. But maybe even if it's 20% of the population, it would be amazing. But I think it's going to be less that actually go through all those steps and want to take on that burden, right? So most people don't want to take on that burden. They won't want to. And as more insurance comes into the market, the idea of not your keys, not your crypto becomes less and less of a thing, because at the end of the day, we're going to end up with hybrid solutions, right? Because we'll end up with kind of centralized order books, decentralized settlement, meaning, trading, if anybody's ever traded out there on a decentralized order book, it sucks. If you're an actual trader and you really want to make money trading, you can't do that effectively on a decentralized order book. One,
Yet.
because it's hidden to you. You don't understand where the liquidity sits. You don't understand. They may give you a warning of how you're going to be slipped, but that warning is just a warning. You don't really know what's going to happen. You can't trade in and out of the book. You can't set order. It is just it's just bad for trading. So real traders, meaning that are either high frequency or whatever, are always going to use centralized order books. And that's really where the liquidity is going to be. So at the end of the day, no matter how good decentralized order books become, they're never going to be able to compete on latency and other things with centralized order books.
No.
But decentralized, meaning settlement between parties so that you don't have to put your assets in a centralized wallet, that's a great thing. I think that's where we're headed. I think exchanges like Coinmetro, other exchanges that want to do right by their clients will end up in the next few years with a very much hybrid model, where some pieces are centralized to give the best experience and allow for people to have a choice, and some of the products are decentralized for the same reason.
Yeah, no doubt that for now you cannot trade on any DEX. I mean,
Yeah.
as long as you have an AMM model, I don't think that will be possible. Like effectively, you can buy assets that are not on any exchange to hold.
Yep.
I think that's a good thing for now. But yeah, I agree that it's not very good for traders. And I do see what you're getting with security, and I see a lot of people. I mean, a lot of friends come to me, ask me how to take money of exchanges, and some of them I tell them, well, you don't need to. There's no point for you. You're not going to go on any decentralized application. You don't have like millions stacking on an exchange. Don't worry. What I think is the main concern with the not your keys, not your crypto, right? Is the like, because you're taking the approach that you want to do good by your customers, but maybe not all exchanges want to do that, right? So
Yep.
that's kind of the only thing that I can see that I worry about. Like if you have an exchange that wants to manipulate an asset and maybe doesn't have enough liquidity to let people withdraw and cuts
Yeah,
the
yeah.
withdrawals.
I'm in agreement with you 100% there. And I think there's also, the bad side of decentralization as well, because There have been decentralized exchanges that have also run away with funds because they simply sit on the other side of transactions. You
Yeah.
don't know who you're transacting with, so you could be transacting with the same DEX. And so that comes down probably to at least a certain extent to proper regulation.
Yeah.
And one of the issues with a decentralized exchange that's truly decentralized is how do you regulate it? So you still and it's not a trustless system because you have to trust the system. And so regardless of how trustless something is, there is still an element of trust you must have when you interact with it. And
If
I
you
think
can
that
read the smart contract, I guess it's trustless. But I mean, for 99% of people, it's not trustless.
Yeah,
That's for sure.
and even when you read the smart contract, first you have to understand it. There's a learning curve there, like you said,
Yeah. Yeah.
which isn't going to be for most people. But even then, as soon as if you're trying to bring in normal capital, like fiat capital, and you're going to have to use a bridge, or you end up having to use something else again, maybe decentralized, but we all know what's happened there. So in many
Mhm.
ways, this industry in total, decentralized, centralized, hybrid, whatever, is still very nascent. It's still very new. There's a lot of things we still need to fix as a community in general. There's still a lot of things we need to build. I think the
Absolutely.
great thing is that because there's choice, we get the best of both worlds. So as long as there's choice, I'm happy in this industry. I don't
Mhm.
want decentralized exchanges to go away, and I don't want centralized exchanges to go away.
Yeah.
I, you know, I,
Absolutely.
I want I want clients to have the option. I know that there's certain things we're never going to be able to do being partially centralized that decentralized ecosystems will be able to do. And I think that's great because we can still provide value during the chain, right? Because people need to
Hmm.
come in from fiat, they need to get out to fiat, they need to be able to talk to someone and ask questions, and we can provide things that decentralization can't, and
Yeah.
decentralization will provide things we can't. So as long as we
Absolutely.
can live in harmony, I think it's a great step towards the future.
Yeah, and you mentioned the Fiat on ramp to Coinmetro. I think that's one of the best I've ever used. So congrats on that. And it's
Appreciate that. Thank
actually,
you.
yeah, actually, it's the only exchange I use to bring Fiat in and out. Uh, but one of the things that people kind of talk about, like being not, it's not there yet. It's the liquidity. Like there's not a lot of liquidity yet. What's your plan to kind of boost it to bring more people into the exchange?
Sure. So yeah, one thing I'd start off just by saying that volume and liquidity are not the same thing.
Yeah.
And so I do know, and I don't think you're making that mistake, but I know a lot of people do make that mistake. So they look at volume, and as a small exchange, as an exchange that's been building for like 3.5 years, and really is just now kind of going down the path of mass marketing. We know that our volumes are less than most of our competitors. We also know that we're building an ecosystem where volume isn't necessarily the first thing that we look at, because we're trying to build something that gives a lot of benefit and value to people that aren't necessarily just trading in the crypto
Hmm.
markets, right? So back to your question. Liquidity comes from a few different areas, right? We do have liquidity providers. We have some big liquidity providers. We have some regulated liquidity providers, et cetera, that feed into our order books. However, we have this kind of, I guess, this nickname that goes around about us, or this people call us the gem exchange, yeah? And that means that, and finding gems is not easy. And normally, those assets that we find, kind of the diamond in the rough, are small, they're illiquid, and
Yeah.
no one is pricing them.
Hmm.
And so, what some of our competitors do, and this is not just in crypto, this is in FX, this is in equities, this is in any market. Well, less on the equity side if you're talking about major equity markets, but when you talk about like pink sheets and small illiquid stocks, this happens there as well. What happens is that the larger exchanges that have much more capital on hand will simply fill the order book themselves.
Yeah.
And so they fill the order book with a couple 100,000 to dollars, euros, pounds, whatever the case may be, and they just dynamically trade within their own order book. Simple as that. They
Yeah.
take on the risk. Some of them may go fractional reserve to do that,
Hmm.
and those are two things that I generally don't want to do, because what it does is it brings conflict. And I know, again, this is probably one of those things that while you're in the business, you're like, oh, that's great. When you're outside the business, you don't really care. At the end of the day, the client just wants to be filled. They
Yeah.
don't
Yeah.
necessarily care how you fill them. But from an ethos standpoint, I want to make sure that everything we do at Coinmetro follows that mission and vision and purpose. And so sitting in the order book and trading against our clients, even if they get good fills, generally will end up meaning that they lose money over time. Because as we build up bigger positions, we need to get out of them, which means in a small market cap like a gem, we are going to affect price. So you
Yeah.
talk about market manipulation. It's not necessarily market manipulation, but if we're sitting on the, let's say, the sell side of the book as people buy, eventually we have to buy back in. On the other side of the coin, if people are selling to us, we need to sell back. And we're going to do it in massive chunks, because obviously we're not going to do it as soon as we buy in or sell out, because it basically it's impossible, right? The market would just stay neutral. And
Yeah.
so that creates a conflict of interest, one that I don't really want to have to deal with. It's an easy solution because we could do it, but it creates a major conflict of interest. So how do we get around that? One is by working with more and more liquidity providers. Unfortunately, there's a bit of a catch-22 there. Most liquidity providers have never been in retail. So they have an institutional mindset. And that mindset is, if you don't do this much volume, we don't want to give you liquidity. What they don't understand is that without the liquidity, it's hard to do the volume.
Yeah,
Right?
of
They kind
course.
of go hand in hand. So fortunately, we've built up at least a good enough reputation over the years that we're now talking to many more liquidity providers, and we're slowly bringing on 2 or 3 or 4 more. And some of these are very big names that otherwise don't work with smaller entities like Coinmetro. And so over the next coming months, especially now, unfortunately, we're in a downturn as far as pricing goes. But in terms of access, a lot of these players that wouldn't want to talk to us previously, or said, you know what, you guys are doing a great thing, but unfortunately, until you hit this point, we can't do business with you, are now
Mhm.
opening the door, because obviously volumes have dropped everywhere, and now they're just hungry for some business. And so more liquidity providers are coming. And then second to that is an easy answer. It's more clients. And historically speaking, we haven't done a lot of marketing. And now we're just starting. We just finally put together what we feel is a rock solid team in marketing. And we're finally pushing some capital towards marketing. And while we've only done really small tests up to this point, we're getting ready to gear up. Those tests have been really, really good. We've been able to keep our acquisition costs down, far lower than most of our competition. And now we're looking at conversions. And so I would say when you look at Coinmetro, we're kind of like the Apple. If you were alive back in the 90s when they had these commercials about Apple and Windows, and like the Windows guy was all
Mhm.
stuffed up and like had glasses, and the Apple guy was kind of cool, and and if you look at it from a high level, Apple never created anything. What they do is they take products that already exist and they make them in a very specific way that they attract a very specific clientele. And
Mhm.
I think in many ways, we're similar to Apple. We're not going to be the first most of the time. You're not going to see us take major risk, put client capital at risk. We're not running to Three Arrows. We didn't have money at Celsius. We weren't trying to, conquer the
Incredible.
world in a day. We're not buying stadiums. you know, we're not doing any of that stuff. What we're doing is we're on a let's say maybe sometimes a turtle pace, but we're working very diligently to make sure that we service our clientele and do good by our community. And sometimes that moves a bit slower than the rest, but at the end of the day, it works for us. And in the end, we create something that many people can enjoy and benefit from. So more clients, more liquidity providers. Once more clients bring liquidity. New clients that come into the market aren't selling because they don't own anything; they're buying. So that
Mhm.
helps create buy side liquidity. Buy side
Mhm.
liquidity then helps us get more liquidity on the sell side from our liquidity providers, and over time we build better books. And I'll
Mhm.
just mention that in majors, again, key caveat here is liquidity is not the same as volume. So while you may see small volume on days in those majors, we have ample. I mean, you could come in with a limit order and fill 100 million euros worth of Bitcoin in a relatively short amount of time. You might not see it in the book, but that book is dynamic. So you put your order in, it'll fill, and it'll fill relatively quickly. So obviously on small caps, it's a
Yeah.
different story. Small caps mean we have liquidity providers, they take some risk. We also have clients in the book, but that requires, more of those clients to come and fill out those books, because trying to get liquidity on an asset that has a 10 million market cap or a 20 million market cap or a 100 million market cap is
Very
almost
good.
impossible.
Yeah.
Institutions won't touch it.
Yeah. I agree. I agree. Uh, One of the things I wanted to discuss with you as well was the token XCM. Like, what was the reason behind building a token for your exchange? And can you tell us a little bit about its utility and use cases?
Sure. So I'm going to be really honest with you. The first reason that anybody created a token was to raise money. It's treasury. That's just the honest truth. Uh, And as I said back in my initial response, one of my first responses sitting here on this interview about ICO, I still think ICO is probably the biggest innovation that crypto's brought to us. And anybody that's ever tried to fundraise would probably echo that same comment. And so the first reason anybody brings a token into this world is treasury. Now that doesn't necessarily mean money in your pocket as an owner. What it means is that it's a way to bring in capital and or be able to move capital and or be able to monetize pieces of an ecosystem that otherwise would be very difficult to monetize. The real question starts to roll in is when you go, okay, we're going to launch a token, treasury. Now, you want to make sure that that token has use cases, because if it has no use case, obviously it has no value. If it has no value, no one's going to want to buy it, trade it, and or use it. And so you start building an ecosystem around that token and trying to figure out how intrinsically you can stick that token into different value centers of your ecosystem. And as an exchange, as we grow and the more products we bring in, we're able to add more value to the token. When you start out with the utility token, let's say your standard utility token, what does it do? In many ways, it provides access. So whether you're paying fees in that token, et cetera. For us, when we sat down initially and said, okay, do we token gate Coinmetro? Is it that you have to own the token to use the services? We thought, well, that's pretty static. So that means you come in, you buy one token, 100 tokens, whatever the amount may be. And that's it, right? You have access. So what happens? And this is before, staking was a thing. This is before people were thinking about APR on locked balances, et cetera. And so, okay, that doesn't make much sense. Plus, it limits your ability to have people test your product. And you put another step in the process of them onboarding. They have to onboard first, then they have to buy a token, then they can actually use your services. So no. So how do we get the same effect without actually having them buy the token? And what we came up with was pretty simplistic, but in the end, pretty powerful. And that's that every transaction on our spot exchange, we get paid commission, obviously, and that commission is paid in the base asset you're trading. So that's the first asset in the pair, right? So if you're trading, BTC euro, we get paid in BTC. If you're trading XCM, euro, or then we'll get paid in XCM, et cetera. So every trade that happens on the spot exchange, we take what we're paid and we buy XCM in the market, in the book, and then we literally burn. It was 100% of what's on the spot exchange, 100%. So that created a mechanism by which the token becomes deflationary, because over time, the more people that use the exchange, the more people that actually pay a commission, the more XCM we're buying, the more XCM now we're burning. Before we were vaulting, and that was basically because of regulatory uncertainty about burning. So, but now we do burn XCM tokens. So that was the first step towards utility. And the question is, okay, all these products we're going to build, how do we tie in XCM into those products? And over time now, we've built a staking platform, so you're able to stake your XCM. We now allow collateral on our margin platform in XCM, so you're able to use your XCM as collateral to be able to trade other assets on leverage. You also get discounts. Those discounts go across different products, the margin platform, our spot exchange, et cetera, up to 40% off the commissions that are charged on your account, depending on how much XCM, how much of the token you own. And those are all based on a tiering mechanism, tier 1, tier 2, tier 3, which go from 10 to 25,000 to 50,000 XCM. Okay. We're now going down the path to create what I would say are very exciting tokenomics. And what we've done, the first one that we did, which actually was last year, was adding what we call Mars to the staking experience.
I saw
so Mars is multi-asset rewards. So everybody wants to go to the moon. Well, we want to go to Mars, right? We want to go a little further. And Mars is a beautiful concept in that you buy one asset, you buy XCM, you want to support the ecosystem, you want to get discounts, you want to be able to take advantage of all the new tokenomics as they come out over the coming months and years. So you buy XCM and you get into one of these tiers and you stake it. You're making some APR, APY as well in XCM. Great. But known as the Gem Exchange, we like to list things that have the potential to do really amazing stuff with their prices, right? We look for teams, we look for projects that we believe are going to do very well fundamentally and also, on the price side. But that means that you would need to have excess capital to buy into every single time we list something, right? And not everybody's going to have excess capital every time there's a new listing. Mm-hmm. So how do you take advantage of those listings? Well, Mars. As we grow, our goal is to take every asset that we list, every single one, and find a way to make passive income out of that asset and then pass that passive income on to our clients. whether that be staking, lending, borrowing, and who knows what down the line. As DeFi and as CeFi and as hybrid Fi become a thing, there are going to be lots of ways to generate passive income. Our first goal, pass that income on to our clients. But then obviously we make some money on these vehicles as a company. We take 10, we take 20% of what's accrued, and that becomes revenue for the company. Well, what can we do with that revenue? How do we give more value back to our token and back to our community? So that's what Mars is. Basically, we add assets to Mars and we take a percentage of what we earn from whatever passive income opportunity exists on the platform, and we pass it on to XCM holders. So over time, you get, 2, 3, 4, 5, 10, 15, 20, 30, 50, 100 different assets, even though you just bought one.
Mm-hmm.
And imagine, even if that asset that you get might account for, a 10% bonus on what you're getting. So if you're getting a 4% APR, you get 0.4% in that asset. Sounds like a small amount, but if that asset does 100x, does a 10x, does a 20x, you can do the math. It becomes quite exciting. And those assets are paid as long as we're making passive income on them,
Mm-hmm.
as far as company revenue goes. So that was a major, I think, piece of our tokenomics that was released at the beginning of this year. And we added, I think, initially three assets into Mars. One of those was UST, cough cough, which obviously has now been removed.
Yeah.
Kadena was another one. We were fortunate enough. When we list things, we generally look to actually build with them. We don't just list things to list them. And
Mm-hmm.
so with Kadena, listing Kadena, being the first centralized exchange to list Kadena, we actively started working with them. And one of the things we did was we created a staking program for Kadena
Yeah.
based on their bonding program. And that bonding program filled up, very quickly. I think it took a few days and it was filled completely. But that was one of Amar's assets as well. Now, Kadena bonding has come to an end as of July 14th. So now we're currently working with them to see how we can reactivate these things and provide more value. But we just
Mm-hmm.
added, I think, THT to Mars, and we have a few other assets sitting in the waiting area that are going to become added. So as I said, over time, the goal is to have every asset we list sitting in Mars and also sitting on some passive income.
Awesome.
And we're also looking, we have an invest platform. We've done things in the past where token holders have gained priority access into bond and equity raises. We will continue to do that in the future. And also we have this thing called the family airdrop, which obviously we actually haven't done yet since the ICO. The idea behind the family airdrop is as we expand and as we list new tokens, we request an amount of tokens from those listings and they get airdropped to everyone. That's also part of the XCM utility. We
Mm-hmm.
haven't actually officially done one as of yet, but as we start to list new projects, especially in the years to come, as the company grows and we have more leverage in the industry,
Mm-hmm.
that's
Yeah.
also a major perk, I think, that goes to XCM holders.
Awesome. One of the things about the token that you didn't mention now, but you got to explain to me because I can't figure it out. It's the price floor that you set on XCM. So how does that work, and how fair do you think that is in terms of market, open market?
Sure. So I'll start with the end of the question first about
Okay.
it being fair or not, and I'll tie in some of the first question you asked as well. So I think when we look at utility tokens in general, we as an industry, we're very cognizant to make sure that there's a difference between utility and security. And we do that almost in every aspect of how our businesses operate, right? We really want to make sure this is utility because it has an ecosystem, it has a platform, it does this, it does that, it has this. But on the trading side, utility tokens are treated as securities, 100%. They're traded just like securities in what you just described as an open free market. That means that they are speculated on. Now, we all know they're speculated on. But when you talk about true utility and true intrinsic ties back to the business, I think an exchange is one of the most comprehensive, probably utility tokens when you talk about exchange tokens, simply because the business that the company is in is, well, trading. It's about moving assets, and you have your own asset that is moved. It powers the ecosystems, etc. It's a product at the end of the day. It's not a security. It's a utility token, and it is a product. And I would say that XCM is probably one of the most important products that Coinmetro offers. As a product, we give value back to the client when they purchase that product. That value has a price. Now, allowing a simple free market, one that is illiquid, to dictate the price of a product for any business would be insanity. Imagine if, you could go buy, anything at your grocery store based on the free market principle. So you just walk in and you want a banana. There's nobody else in the store because you went there at 3 a.m. No one else wants a banana. So you pay, 1 cent for your banana and you walk out. Now, when you go there at 3 o'clock in the afternoon, that banana may cost you €2 because there's a line of people that also want that banana. That's not necessarily how free markets work when it comes to products, when it comes to commercialization of products. At the end of the day, XCM is a product. That is the first reasoning for a price floor. We've done price floors in the past: 1 cent, 3 cents, 12 cents, and now 60 cents. In the past, when we did price floors, they were in different markets, different market sentiments. And when we did the price floor, we never really saw the price floor hit. It allowed for people to move their orders up. Price floor was in place, and that was it. Trading happened, and it always stood above the price floor. In this recent price floor, after it was initiated, there was about 2 million sitting in the book. And then, what happened? Three Arrows, Terra, market collapse. That was the catalyst. But in reality, the real reason for the market collapse is, inflation, war, supply chains, energy costs, etc. That's the real reason, right? But that happened. And so what we saw was a lot of panicked people that lost a lot of money across their portfolio and started selling XCM to recoup some of that investment. Ate through that 2 million really quickly. Now, we have investors and we have other clients that support XCM extensively, but we ask them to pull themselves from the buy side for the time being. Reason being is that having an overinflated buy side right now simply gets depleted. People have lost money everywhere else, so they simply want to recoup that investment. Mm-hmm. At the end of the day, part of being, let's say, a CEO is about fiduciary responsibility. Normally, that sits to your shareholders only in a normal company, right? You have shareholders, you have fiduciary responsibility, meaning that when you make a decision, the first reason you make any decision has to be to the benefit of the shareholder, which means, and in many companies, it's sometimes to the detriment of the client, but it's to the benefit of the shareholder. Now, in a company like this, one where we're ultra transparent, we do AMAs, we have a community, we constantly soundboard off the community. Our fiduciary responsibility isn't just to shareholders, it's to token holders. Mm-hmm. And in a market that's volatile, and with a company that has a long-term vision, and with most of our clients sharing that long-term vision, that fiduciary responsibility is about protecting value. And so part of the price floor, another piece of the price floor is about protecting value. And yes, there's an argument to be made that in certain market circumstances, like we're currently dealing with now, where liquidity on the buy side dries up and is eaten through, that people have an inability to be able to exit the market. And that is a fair argument. But that argument is weighted by the fact that while a few people may be looking to exit the market, the vast majority want to maintain value. And so making that fiduciary call for token holders, any decision you make is never going to be liked by everyone. What you need is to make a decision that is liked by the majority. And at this time right now, even now, the price floor and the reasoning behind it is definitely backed by the majority of and not even the majority of XCM, because that would be a weighted response, right? Because obviously there are 10 or 20 investors that hold not the majority, but a large majority of XCM. Mm-hmm. It's not about just those, 10, 15, 20 people. It's about the majority of XCM holders wanting to maintain value. And right now, one of the major focuses at Coinmetro is to make sure we reignite that order book. Obviously you can still buy XCM, and there are people buying XCM, but it looks scary in that there's a lot of, XCM sitting on the sell side because it's simply piled up. In reality, it's 12 to 13 people, the vast majority of that XCM. And so we're already in conversations with them to get them to help us get the book back to a place where you can buy and sell, any amount you wish at any time of day. At the end of the day, I'm not against selling. Never have been. If you want to sell, I want you to be able to sell. But in order to get there, we need support from our community. And we will get there. And I think in the next, I would say now 60, 75 days, we are going to see a reactive order book. We will see an additional buy side. We're going to do many things on the tokenomic side. We're going to do things even on the commercial side to incentivize people being on the buy side and disincentivize them being on the sell side, as well as adding in more liquidity, as well as bringing in market maker, as well as bringing in a spot trader that will trade some treasury from the Coinmetro side to also help reactivate the order book.
Okay. Thanks for that explanation. I really needed to understand because it was kind of confusing to me how you can set up a floor price on an open market, right? But I understand you're seeing it as a product, right? So it's a product
Right.
that has a price, and then people can, of course, trade it higher.
Yeah.
Or
The end of the day, the if right now is probably, if you take the data we have right now, you're not going to see what I see in the future. And what I see in the future is when you think about any utility object, whether that be like Amex points or whether it be some other to airline miles, for example, the amount of utility items or objects that you need to support a growing ecosystem is normally several multipliers higher than the actual volume of transactions, because usually there's a multiplier of rewards, or there's a multiplier placed on how these utility items actually work. And so as Coinmetro grows, and as it grows quicker, especially into like the next bear market, or through this bear market into the next bull market, we're going to have a need for a certain amount of value to be locked in XCM. And if we don't have that value, we would actually run into the exact opposite of what we see now: a massive buy side with no sell side.
Mhm.
And while that may seem better to a layman, it's not better, because what it leads to is if you're trying to buy and no one's selling, you can't buy. And it may sound like a better scenario, but it's actually not a better scenario. And so that the price floor is part of that, to make sure that as we grow the next 4 or 5x from where we are now, that the tokenomics that we have can actually function. Because as we grow in volumes and we're trying to buy XCM, we need to make sure that there's enough value sitting in the sell side of the book to be able to actually function those tokenomics. If not, they don't function. And so
Mhm.
there's a lot of things behind the scenes. But again, I mentioned I think the two most important, at least for people that are listening. We can definitely go down a whole rabbit hole about a whole bunch of other formulas and stuff to make sure that the
Mhm.
ecosystem can function. But definitely those are the two major points, I think.
Okay, gotcha. Uh, Now, any new exciting features that are coming to Coinmetro, or maybe new listings that you want to talk about? Anything that you can alpha that you
Little
can
alpha, a
share
little
with
bit of
us?
alpha.
Yeah,
There's
yes.
well, we as anybody who's been following us has seen, we've kicked off a lot of new listings. We have this 15 weeks of summer program that's been going on now for 8 into 9 weeks now, and we've listed more assets in that time than we've ever listed in the history of Coinmetro. So we're going to continue down that track, and even after the 15 weeks of summer, you're going to see additional listings from Coinmetro. It's gonna slow down a bit that gem exchange, because trying to find gems, there honestly aren't many in the market at any one single time. But we want to have a nice mix of things that we believe are still solid projects, and also
Mm,
things that we really think are going to do well. And so, off the top of my head, we've been looking at a few projects, I think, that are quite interesting. We've also been looking at some that are relatively unknown. And I think for me, the most exciting ones are the ones that are unknown,
mhm.
because at the end of the day, it's great for the business, but it's also great to introduce people to these things that potentially can do quite well. I can't really name drop anything on the show, unfortunately, but I would say that it's important for anyone just to join our Telegram. Go to @CoinMetro, join the Telegram, lurk around. We share tons of alpha in that Telegram. I just got in
Okay.
trouble because on the AMA I shared a bunch of alpha, and our guys in
That is
marketing
good.
got pissed off. So I genuinely do share a lot of stuff. In terms of product, we have a lot of stuff coming down. We have Challenger Bank licensing now. We have EMI licensing in EU. Q4 we're going to be launching Challenger Bank services. So you're talking about debit cards and virtual cards, things that other companies already do. But as I said, we're kind of the Apple to the Microsoft. So when we do something, we do it differently. We try to do things that reduce risk to our end client, and actually reduce a bit of revenue that comes to us, but create just a better overall journey for our clients in the end. And like I said, happy clients mean profitable business. You shouldn't ever start with "we want a profitable business." That you want to solve your clients' problems. That's how
Exactly.
you have a profitable business. And also just continually building on our app. We just launched our web app 5.0. We have a huge update coming. over the next month or two. That's going to, I think, completely revolutionize the app. Even though now the app, comparatively speaking to where it was a year ago, is absolutely exceptional. But we're going to continue working on that and adding more passive income. Passive income, I think, is going to be a big thing for the next couple of years. And trying to figure out how to add passive income opportunities that aren't, linked to major counterparties like a Three Arrows, like a
Yes.
Celsius, et cetera, so that we can ensure that, the next time, because unfortunately this is probably going to happen again, the next time we see something like this happen in crypto, just like we didn't get majorly affected in this one, we won't be majorly affected when it happens again. So.
Awesome. Awesome. So I know you cannot mention listings, but I think you mentioned a few times that you're open to list Kadena tokens, right?
Absolutely. So when it comes to Kadena, we've, like I said, that was one of our original gems. We'll call it, was Kadena. I think when we listed Kadena, it was 22 cents, if I'm not mistaken. I had two calls with Stuart. I had a call with Anastasia. I had a call with. I think I ended up having 3 or 4 calls. And when something clicks, it clicks. It's like any relationship you've ever had in your life. There's love at first sight, and then there's no.
Yeah.
And there's some, there's definitely some ground in between the two. But they said the right things, they had the right experience, they had the right vision. That vision aligned with ours. And when we list something like that, we want to make sure that we provide value to their community, and we want to provide value to ours. And I mentioned that the Kadena staking that we did, we're looking at KBTC, KETH, KUSDC to help with a centralized bridge for those. We've already been a centralized bridge for wrapped Kadena on Ethereum. We want to continue that relationship. It's a great relationship. We want to continue doing great things with Kadena. So K assets, absolutely. From an infrastructure standpoint, we're ready to roll. We can list K assets. We want to find assets that fit into our requirements. And a lot of times I get asked, what are those requirements? And I give the same response. I can't really give you a bullet point list, because just like when you go to try and, I can tell you from a high level, we look at the team, we look at the project, we do to a certain extent a tech audit. We want to see what is the goal? Why are you here? Why are you doing this? Why a token? Why a K asset? Why didn't you choose another? Why did you come here? What is the ethos of the company? There's a lot of different questions. It's really about understanding. We don't want to go down the path of getting in bed with companies that end up doing things that we're embarrassed about. Simple as that.
Sure.
And so it's a bit of a painstaking process, but we absolutely want to support the Kadena ecosystem. We're here to support the Kadena ecosystem, and we are excited for the first K assets that get listed on Coinmetro.
Okay. That's what we all want to hear, right? Now, on that line of you don't of having to be careful with who you are dealing with, a while back there was some problems, some controversy around Kaddex. So I think it would be good to kind of clear the air on that. You back then you made some public statement saying that you would need some clarification. You wanted to talk to them. Uh, how has that process been handled? Have you had any clarification? Are you now more okay with everything that transpired?
So I think I haven't had the clarification. I haven't had that conversation actually. I've had conversations indirectly and directly with the Kaddex team about different things, but I haven't really had that conversation yet. And I guess that's partially because of my schedule, and probably partially because of Nicholas's and the other team at Kaddex's schedule, that we haven't really sat down and had that conversation. I initiated the conversation. I saw the same public announcement that was sent to that summed up what happened. Um, from the start, I was defending Kaddex in our channel, because there was a few people that were quite vocal about what happened, or what their vision was of what happened, and why they thought that it was bad or unethical, or whatever adjective they decided to use. And I made a comment that said, "Look, from the face here, I don't see anything that doesn't that to me would say unethical. That to me would say, raising money and then using some of that money to buy into your own, secondary raise. I can see how people might see that as, I can see how people could get upset. I can see it because, But I also understand that there's nothing wrong with that. There really isn't. In fact, most companies do it. And I hate comparing things like this to traditional finance, because we're trying to move away from a lot of things that happen in traditional finance. But in traditional finance, this happens all the time. It's akin to you raising money and then using some of that money to market to raise more money. That's what it is.
I
But
guess, yeah,
go
I
ahead.
just guess that what people were kind of concerned was more of the lack of transparency
Yeah,
in the
and
process.
and I that's something that's the one thing, because if it was just based on, this is what happened. Look, every CEO, every company makes mistakes. I've made
Sure.
my fair share of mistakes.
Obviously, yeah.
And I've learned over time that the best thing you can do when you completely, literally, like put your like step in shit, basically, like just fall on your face, is quickly let everybody know that you fell on your face, what happened, how it happened, and move on. And I didn't like personally the fact that it took so long for them to make a comment about what happened, and initially pretty much said it didn't happen or tried to evade the question. I understand why. It's very difficult to run a company when you're exposed 100% to your community. It's not easy. As
Yeah,
I
that's
said, there's a fiduciary responsibility to token holders and shareholders, and sometimes those two fiduciary responsibilities are exactly opposite. So shareholders want one thing, token holders want another. Your community wants something else,
hmm
and you have an obligation to all of them. You have an obligation to your shareholders. You have an obligation to your community. You have an obligation to your token holders. And again, sometimes those obligations are completely opposite of one another. So I get why it happened. I understand the frustration. I understand probably thinking, oh, what do we do here? If we say this, they might not like us. If we don't say it, we may have, what do
yeah,
we say? Maybe they didn't, maybe there wasn't even communication internally and there wasn't an understanding of what happened. I don't know, because I didn't really get the full download. So I can't comment on exactly what happened. What I can say is, out of everything that happened, the one thing I didn't like was that they weren't quick to say, you know what? Yes, that's what happened. We can't give you the full download right now. We're going to create a report, but yes, it did happen. We're going to explain to you why, and we're going to do our best to make sure that we regain your trust. That would have been
yeah,
the best. That would have been the best response. It's easy, it's quick, and it maintains that level of transparency and honesty you would expect from a company you just invested in. And I didn't
yeah.
see that. Now, having said that, when I told the community that for now, working directly with Kaddex wasn't going to be something we were going to be doing, because simply there's enough voice inside of our community where, again, I have a responsibility to make sure that I do right by that community. And in this case, it's not that I have a whole bunch of pressure from my shareholders, or I have a whole bunch of pressure from token holders to have a relationship directly with Kaddex. And so right now, it's kind of status quo for us, that I still need to have that conversation. We still talk, but because there is an intrinsic connection between us, because we have Kadena, we have TokenSoft, Coinmetro, and anything we do with K assets is going to benefit Kaddex. And some of the things they do will benefit us through our centralized bridge. So there is a relationship, and there's going to be a relationship because they are intrinsically tied to many pieces of the Kadena ecosystem. But for us to move forward with some type of listing, uh, I would need to understand exactly what happened. I would need to understand why what happened, and I would need to understand that in the future, when something like this happens, that their modus operandi for how they deal with it would change drastically. I think people in life deserve chances. Like I said, everybody's wrong more than once in their life, and I'm all for giving chances. And I genuinely think that they didn't do this out of malice. But again, I have a community,
Sure.
so I need to act within those lines.
Absolutely, absolutely. Thanks for the clarification. Now, what projects would you like to see coming to Kadena that haven't come yet? What kind of projects are you imagining in Kadena?
Well, I think as any kind of new protocol, there's a lot of infrastructure needs. I think in inside of the Kadena ecosystem. I saw that they gave out their first grants recently, and there was some infrastructure plays inside there, which was nice to see.
Yeah.
Um, and I think there needs to be more of that. There definitely needs to be some additional work, I think, on the UI UX. Somebody needs to come out with what is like an ether scan. And I know that they have a block explorer,
Yes.
chain web.
Yes.
It is, but it's,
We need
look,
that.
for me, I own an exchange. I understand these things. I can work around pretty much any UI UX. That one's pretty rough. It's pretty difficult
Yeah.
to use.
It's one of the hardest.
And for a layman, forget it.
Yeah.
There's just too much information that generally isn't needed by most people when they're looking up a transaction or trying to find transactions in a wallet, etc., or an address, and it's just confusing. So somebody needs to step up and create, essentially an Etherscan, a blockchain.com,
Yeah.
something that's a bit more user friendly for the average Kadena user, and that's a big piece that's still missing. And I, in general, just more infrastructure. I think infrastructure can be anything from like more dexes for sure, and dexes that focus on different things. Launch pads are great, and there's a few of those, so that's great that there's launch pads. And there needs to be, the thing is that launch pads and dexes and centralized exchanges and better UI UX. Those are all those are all great pieces, and we probably need a bit more, but they also need interconnectivity. So what I'd really like to see is that some of these players, you have Marmalade, for example, that was a project under Kadena for NFTs, etc. And there's definitely NFTs that are coming out. I don't necessarily see, though, a connection yet between decentralized exchanges, Marmalade, the NFT marketplaces, the data providers. There needs to be better cohesiveness between the ecosystem. If you look at other, if you take Ethereum, for example, and you look at all the dApps and things that were built, obviously they have much more time behind them. Obviously there's been much more money invested, et cetera. But if you look at how they started the same way, very much silos, lots of silos building, lots of
Yeah.
silos. But now when you look at that ecosystem, it's not, there are still silos, but there are very few silos, and comparatively speaking to the interconnectivity that now exists between many things, right? Different wallet, when you go on a platform and you want to connect a wallet, there's a slew of wallets you can connect. You can interconnect between platforms. There's lots of ways to be able to jump between protocols and layer twos and layer ones, et cetera, et cetera. So, not that layer twos are needed for Kadena because they already solved that problem. But the point is that there needs to be a better cohesiveness. And I think Kadena themselves need to play a big part in that. Yeah. And I'll be very transparent. I really do like Kadena. I am a Kadena bag holder myself. I think one thing Kadena could do entirely, and this is not just on Kaddex, this is Kadena, is communication. Yeah. We currently have a few questions about to Kadena about their bonding program. No answer.
I had the chance to talk with Emily Pilmore. Yeah. She's not marketing, she's not, but she's kind of up there. So she has a good side of the business and knows about it. So I told her exactly that there's something about marketing and about communication that's lacking. And she acknowledges it. And they are making strides, I think, to improve on that. And she gave me some numbers about Twitter interactions, Discord, some things that are slowly building up, which is good. But I agree with you. That's kind of something that Kadena themselves need to start working
I
on.
think it's just generally kind of a way to do business. It's not necessarily about channels. They can be on every channel possible and still have bad communication. I think it's just it's an ethos that needs to change inside the business, that they need to communicate more outwardly. They need to be more honest in that communication. They need to, I know a lot about missing roadmaps and deadlines. Woo, I know a lot about that. But again, the thing is that when there's a face there to take responsibility for missing that deadline, and there's somebody that's like, yeah, you know what, we messed up. Yeah, I'm sorry. We're working on it. This is why it happened. That goes a long way. That goes a long way. And I think they need to. And I understand that the background that most of the guys at Kadena have, they come from places you don't do that. And so did I. I came from traditional finance. You don't do that. You don't
No
go
one
and
does
take a
that.
mea culpa in traditional finance. It just never happens. But that's the reason why crypto was created. That's the reason we're all here. We don't want to repeat the mistakes of traditional finance, and just being a human, and being there when people want to ask questions, and it's needed, right? There should be no hard questions, right? There's no such thing as a hard question. There never is. because if it's an honest question, it just deserves an honest answer. Simple as that.
Absolutely, absolutely. Kevin, that's basically what I wanted to talk with you. Thanks a lot for being here and answering everything that was thrown at your way. Anything you want to share in terms of like where people can find you, Coinmetro? You
Absolutely.
can
So
tell
you can
them.
find Coinmetro on pretty much every social media network at Coinmetro. Telegram is where lots of our community hang out. That's at Coinmetro as well. You can also find me on Telegram at Kevin Murcko, no space. I guess you couldn't put a space in a Twitter in a Telegram name, but just in case you've never been on Telegram, there's no spaces. Also, I'm on Twitter at Kevin Murcko. At Coinmetro is also on Twitter. Like I said, we're at Coinmetro everywhere except I think maybe Instagram, where we're at Coinmetro_official. Somebody grabbed Coinmetro before we could for some reason. So hats off to them. But yeah, come to our Telegram. We're on Discord as well. Hit us up on Discord. We have a great community. We'd love to have you be a part of it, and we're always there to answer questions, whether they're easy or hard. We like the hard ones. Hard questions are great.
Okay, glad to know. Guys, if you want to ask questions, we'll add the links in the description below, and you guys can go ask the hard questions and the easy ones as well. Anything you want. Kevin, again, thanks a lot, and see you next time. Bye, guys.
Thank you. Cheers.